Good day, guys. Welcome to another session with Nes Capitals. Today, our main focus we're going to be focused on imbalances, fair value gaps, displacement. It means the same thing, just different terms. Fair value gap is an imbalance. It's a three candlestick movement. Actually, it's a three candlestick movement. It's an imbalance. It's an efficiency. It's a displacement. It's either buy side imbalance, sell side inefficiency. It's either sell side imbalance, buy side inefficiency, or some define it as an displacement. So yeah, this is a monthly time frame. If you remember from our last sessions, I specified that this monthly time frame that is specified as a major time frame. Actually, the reason why I love using major time frames, they give you clarity of where the bias of the market is actually, where is the bias actually. That means this horizontal line. We're just starting out. This is a monthly time frame. Remember what I said in the monthly time frame. There's less price action going on. Above this candle, there's buy side liquidity. Remember what I said also that above the candles there's buy side liquidity. Below the candles there's sell side liquidity. So this horizontal line. This step index actually, guys, is a derivative synthetic. I love using derivative synthetics because I'm affiliated to derivative. I'm a derivative affiliate. So, and actually, when I started this trading journey of mine, I would say derivatives the first broker that I ever used, and I never had that much of issues with them actually. They're reliable. This is not for promo actually, just honestly speaking. So, and I love the codes actually. What I'm marking out here is previous sell liquidity that got wiped out, swept out, or taken out. Those sell liquidity below this candle. We'll actually get to the imbalances. Just be patient, guys. We'll actually get to the imbalances. I'm just trying to show you something. And let me use this arrow. Remember what I said above this candle. This is a monthly time frame, as you can see, guys. It's a major time frame, specifically speaking. Above this candle which I marked out, the buy side liquidity. Below it, the sell side liquidity. I just marked out the whole. The open of close. Remember, it's just the body. It's an up close candle. It open here, it close here. It's the body. The open close is the body. It open here, it close here. It's an up close candle, which actually also an order block. Okay, let's continue, guys. I was just trying to show you something. I marked the buy side liquidity above this candle on a monthly time frame, which is also a major time frame. I marked out the sell side liquidity below it. I want to show you something. I'll show you guys something. Let me do this to give you guys clarity. We continue. We're still on the main focus today will be imbalances. Also, you can mention as it has displacement or inefficiencies or fair value gap or three candlestick movement. I'm deep with this. I told you that I know a lot of terms because like this is my fourth day starting this section. I'm a nerd. I love this. I want to show you guys something. I'm pulling out the horizontal line again. Remember, this is the monthly time frame. Right now, what I'm going to do, I'm just gonna mark out the open. This is an up close candle on a monthly time frame, which I'm gonna mark out the open of this candle and where it closed actually. Oh, for now, let me just mark out the open of this candle. I want to show you guys something. You see this? You remember what I said? I'm marking out this candle. It's a candle. It's an order block candle on a higher time frame, which is a monthly. Specifically, it's an up close candle. You can see open here, closed here, up close candle. Let's continue. Now on weekly. I just want to show you guys something. I want to give you clarity. Excuse me, guys. You see where I marked out? Remember, we're on monthly. This is the same level of that candle that I was marking out on a monthly time frame. This is the same level. The above of the week of that up close candle on a monthly time frame. This is the below of it that I had marked here. You can see the difference now. This is the sell side liquidity that I had marked out. The previous sell side liquidity that got taken out. On this horizontal line here, where there's this candle here, is where I marked out the open of that up close candle on the monthly time frame, which appeared after this sell side liquidity got taken out. As you can see, remember, I think I covered this again on the last session, that what I told you, that when price takes out the other side of the marketplace, just in case you can see there's buy side liquidity here, this is a liquidity. Price was on a bias of what? It's on a downtrend. When it go here, it did what? It created a high, went out to clear out the low. There's a lot of sell side liquidity, as you can see. Remember, price different by liquidity. That one I always remind you, because it's one of the important gems. Price is driven by liquidity. So this SI got taken out. The previous SI got taken out. This weekly. Here we have the open of that previous up close candle on monthly. We get to the fair value gaps and imbalances, guys. Just be patient. I want to show you something. Now this is the daily time frame. We're just gonna keep, every time I'm gonna teach you or your guys. I'm obviously gonna start with that time frames. That's algorithmic thinking, because this algorithmic this moves with an obligation to an algorithm. If you understand, that's why I always use the major time frames. They give you clarity. You understand as time goes in when you start understanding this. You see, this is still the high, or say this the buy side liquidity above that up close candle on monthly. This is the low of it. As just we had marked it, you can go back, you can see. You see, we marked out this candle here, above it, below it. But where's the open and close here? The body. Open here, close here is an up close candle. What happened after this candle? Price went down, trigger out the sell side liquidity, which had marked out here. This is the open of this candle. The open of this candle on a higher time frame, major, monthly. Just look at this. I want you to look at this. The range where this candle is located, and how it changes as we go down with the time frames. Look at weekly. You can see this weekly. This is the same level. Above it, below it, where you had marked out. And here, the open of that up close candle on monthly. After price had wiped out this SI liquidity right here, previous SI liquidity. We get to daily, you can actually realize we're still on the same. This is the same level, guys. This is the same level. This is the above of that candle. Here, this is below it. This is the bottom of the candle. It's the same level, the candle that we marked out on the monthly time frame. I want to show you something. It's important to write down notes, guys, because some of these things which I say here, I'm not trying to brag or something. A lot of guys who pretend to be affiliated with price action or who pretend to be A-list, big profit making traders, as you call them, they don't teach you price action this raw the way that I teach it. This naked, this raw. I understand this. I love this. That's why I'm deep with it. This is the same level of that candle which we marked out on the monthly time frame. I can easily go back. I have time, guys. When I'm teaching this, I got time because I got passion for it. You see, this is the same level. This is the same level. Remember to subscribe to this channel, Nest Capital's YouTube. I really appreciate your support, guys, for me to keep on doing this. But I'm just doing this out of the bottom of my heart. If I was somebody, I could choose just to keep this to myself, but I'm not that type of person. Because I got passion for this, I also love for you to learn this. Let's continue. The level of this candle, this monthly candle, the SSI liquidity here got triggered out here. The open of this up close candle. This is an up close candle, guys. Why? Because it opened here on the bottom, it closes up. As you can see, it's an up close candle. Why? It opened here on the bottom, it closes up. Weekly, you can see how it changes. Another candle became two candlesticks. You see, it's another block because it rejected price to go down. And price just delivered the candle and changed and went back to his buyers to clear out the sell side liquidity, leaving out the buy side liquidity here. But I just want to show you how this level, how things change from a monthly time frame to the lower time frames. This is the level way of that candle which you marked out on the monthly. I'm still gonna stem that on your brains. You gotta have time when you're studying this. Patience is a virtue, remember. This is the same level as you can see, guys. This is the same level as you can see. This is the level. All of this is the level of that monthly, the level where that monthly candlestick that we marked out, where the level is located. Let's go down. Let's go to R4. Or before we go to R4, let's do this. Let's just go with all of the time frames because I actually love using all of these time frames for clarity. This R12. You see, this is the level of that candle which we marked out on the monthly time frame. Above it and below it, this is the level. Just look at it. Look at how it expanded from where we came from the monthly time frame. There's just one candlestick. Remember what I said? On this higher time frames, especially monthly, there's less price action going on. We use them for clarity. You see, this is the same level of that candle. Now at hour 12. Just one candle you get to hour 12, it's a whole like a whole range. Look from here up to here. It's a whole range just for it to expand from monthly. When you're at hour 12, it's a whole range. As you can see, let's go here. I'll show you something. Look at this one. Remember also this candle that we marked out. This candle that we marked out on a monthly time frame. The up close candle, the one I just opened. Look at what is happening. It's just one candle. Look at what is happening here. As you can see, the difference. This way the previous sales liquidity was cleared. You can see even when the previous sales liquidity was cleared compared to the monthly, how it differs. You can see here. Let's continue with the other time frames, guys. It's hour 8. I'll bring the arrow back. Actually, this is hour 8, and you can still see. I'll bring the arrow back. This is the level of that candle. The candle that we marked out on the monthly time frame. The up close candle. This is hour 8. One of the time frames that are considered as major. Hour 8. As you can see. The bottom of it, above it. It's a whole entry actually. For somebody who understands this, you can profit from this actually. Why? It's liquidity above here. Remember liquidity. It's liquidity above here. Buy sell liquidity. Go trigger out. That's why price change direction went down, trigger out the sell side liquidity. Remember when you trigger out the other side of marketplace, it indicates that it is highly possible that price might change its direction to trigger out the other side that is not yet triggered. That's one of the gems that you gotta realize. Oh, let me show you that the other candle that we marked out on the monthly. As you can see, this is the level of that other candle that I marked out, the up close candle, the one which is just opening on the monthly time frame. You see the range, how it differs when you go down with the time frames. Why I love using our time frames for clarity. This is hour 6 actually. We're still going down the time frames. Still see the level of that monthly candlestick. You might not believe it. I'll go back and show you. This is the same level, as you can see from here to here. This is the bottom of it. This is above it. It's still the same level of that candle which you marked out on a monthly time frame. The expansion, how it differs, how price differs with the time frames. You can see. You see right here the level of that other candle, which is an up close candle which opened exactly after price had cleared out the previous SI liquidity. This candle started opening. This is the it's one candle on the monthly time frame, as you can see differs as you go down with other time frames. Here there's a little bit of more price action going on. Right now it's hour 4. As you can see, we're still on the same level of that candlestick which you marked out on a monthly time frame. This is the bottom of it. You gotta have patience, guys. This is above it. You see, still the same level, but you see how the price action differs as you go down with the time frames from monthly to hour 4. We've been going down with them like time frame by time frame. As you can see, it differs. Look now, this it shows that there's a lot of price action going on here compared to the monthly, because this is just the level or a range of just one candle, which is an up close candle. Look at what is going on, guys. I hope you're getting clarity now. Just one candle. Look at it, so how you go down with the time frames, how it changes. Now there's more price action going on. Let's check that out. Another one. The other candle that we marked out. As you can see, look at the level. Up close candle. Look at this level. Look at it. The up close candle that we marked out on a monthly time frame after price had cleared out or triggered out the SI liquidity or swept it out or wiped it out. You see, this is actually just one candle action from from monthly time frame, but the price action differs when you get here, as you can see. This is hour 3, still going down with the time frames. This video actually is gonna be long, guys, because my main focus was supposed to be the fair value gaps, but I actually wanted to show you something. I wanted to play this out. I repeat, I wanted to play it already. As you can see, this is still the same level of that candle that we marked out from a monthly time frame. You might not believe, but I'm gonna go back to remind you all this is the same level. All of this price action comes from one candle. From one candle. This is the bottom of that candle. This is above that candle. All of this price action is just one candle from monthly time frame. This hour 3. All of this price action. This one I consider as a medium time frame actually. All of this price action is from one candle from monthly. All of this price action, when you go back to monthly, this is just one candle. This is the bottom of it. This is above it. You want me, guys, to remind you? Go back to monthly. Magic. Look what happened. Now we're left with one candle. Everything that you have been visualizing is just this candle. This is this candle. Bottom of it, above it. Snap back to monthly. Magic. Let's go back to hour 3. Let me show you. You see now things have changed. We're back to hour 3. As you can see now, guys, things have massively changed. Some mentors wouldn't have time to teach you this. Some of them don't even realize that this exists. As you can see, the bottom of it, above it, just one candle from monthly. This hour 3, look at what happened. It's a whole lot of price action, whole lot of momentum, whole lot of momentum. From one candle. You can see the impact of major time frames, guys. I'm gonna keep on going down with the time frames. Like I got patience when it comes to this. Hour 2, hour 1, all of them. As you can see, it's still this is the bottom of that up close candle monthly that we marked out. As you can see, this is the same level of that candle. When you go down with time frames, the price action increases actually. Now it's a whole lot of price action. A whole lot of price action. From one candle from monthly, you go down with the time frames, look at how it expands. This one candle, this whole range. It's one candle. As you can see, this hour 1 actually. Still the same. Look at what's going on. This is still the bottom of that candle we marked out on a monthly time frame. Look at the range. As you can see, it's a rally. It's a whole range. It's unbelievable because when you go back to monthly time frames, just one candlestick, you'll be like magic, like boom. Something just changed with the snap of a finger. As you can see, it's still the same level. Still the same level. Still the same level that we marked out on a monthly. This is a candlestick from a monthly time frame, guys. You don't believe. Look at this. Look at this. How crazy this is. Everything that I've been showing you is just the bottom of this candle and above it. But it's making because let's go back to R1 where we actually are right now. What's going on? Unbelievable. There's a lot of price action going on down here. As you can see, look at this. Just look at this. Look at this rally. Can you believe this is just one candle from monthly time frame? Look at this, all of this price action. Bottom of it, above it. All of this rally just from one time frame. Look at this. It's still the same candle, just one candle. All of this. All of this just from one candle. All of it. Look at it. From one candle. All of this rally just from one candle. This M30 actually. It's a minor time frame. All of this price action from one candle. A monthly candlestick and up closing. This M20 is still the same. Price action just keep on expanding. Because as you can see here, this is that other candle that we marked out on monthly. Let me show you this candle. This candle here. There's also this candle here. The one which actually opened when price had cleared out the previous SL liquidity. This is this one. Let's go back to our. It's crazy, right? Just look at what's going on. Just one candle go to M20. Look at what's going on. It's a whole lot of move. Look. I'm close candle open here. Look. This M20, it feels like magic. Look at what's happening. Just one candle is a whole lot of. You enter here, up here you'll be having like something to secure. Look at this. Look at how beautiful it is. You cannot even believe that it's just one candle for a monthly time frame causing all of this when you go down to the minor time frames. There's a whole lot of price action going on in these slower time frames. F15, as you can see, look at this price action. Open of that candle, just one candle for monthly. Let's go to that one. Let's check that one, the one which you're currently using. I'm still working on getting a proper setup, guys, cameras and just some good tech actually. to start doing this using computers and stuff. Spare me, guys. I got passion for this. I just want to teach all this. See, I want to show you something. This M15, right? All of these, as you see, from here, from below here, coming up here, all of this price action comes from one candle from a monthly time frame. I hope you guys got clarity. Just one candle from a monthly time frame. When you go down to this minor time frames or the medium ones, the price action increases actually compared to the monthly time frame, which is specified as a major. Okay, right now we'll be tapping in with the imbalances right now, which also called a displacement, which is also called an inefficiency, a three candlestick movement, specifically or generally well known as fair value gap. Let's go back to the major, which is monthly. I hope you understood what I was teaching you guys. The difference of price action from a major time frame to the lower ones. I'll be wiping out now this horizontal lines because I hope you understood just how this one candle inspires a lot of price action when you go down with the medium and the minor time frames. I'll be wiping out everything that I used here because I gotta start teaching something else right now. The main focus for today is supposed to be the imbalances. So right now, Bill will be tapping into the imbalances. Actually, let me know what's time, but I think I just feel like doing this. My soul is yelling out for me to do this. You see this candle right here, the one which I'm marking using this rectangle. Remember what I said on the previous sessions, that when price on uptrend, the previous down cross candle support price to go up, or vice versa when it's on a downtrend, the previous up cross candles reject price to go down. When it's on uptrend, the previous down cross candle support price to go up, vice versa when it's on a downtrend, the previous up cross candle reject price to go down. This is what is happening here. This is a level of an up cross candle on a monthly time frame, which is specified as an order block. So order block specifically that what changes state of delivery. Look at the level of this candle rejecting price to go down, as you can see. So I just also wanted to go past this before I continue with the imbalances. I think I have just a specific session for order blocks. Or as you can see, I just wanted to pass by it. You can see the level of this previous up close candle. How is it reducing price to go down? As you can see, how price is respecting this level. As you can see, price is respecting this level, inspiring it to go down. As soon as price enters this level, see this level and up close candle here. This is the up close candle here, the one which I marked out with this rectangle. Look at this its level. How is it respected? It's fair respect, as you can see. Going down with the time frame, you realize. You see the level of this, as you can see, it's just one candle monthly, but when you go down to weekly, you see how it changes now. It's no different. It's different price action from what you're visualizing for monthly. You see, one candle, go to weekly, it's like 3 candles. See the level of that candle. Look at how price reacts to it. Look at how price reacts straight. Get our price strike straight. But actually this was not our main focus. I'll have a specific session for other blocks. Let's go back and try to tap into the imbalances. Actually an imbalance, I would define it as a 3 candlestick movement, which actually creates an imbalance or inefficiency. It's called actually generally known as fair value gap or fair value gaps, fair value gap or fair value gaps. Gaps meaning numerous. So let me mark out a fair value gap and show you guys what is a fair value gap. An imbalance actually let me define before I mark it out. And the reason why I said specifically that stated as buy side imbalance, sell side inefficiency. The reason why they will say buy side imbalance, sell side inefficiency. It's a 3 candlestick movement. Instead the buy side will be there will be just buy side, so it's causing an imbalance because price shouldn't just offer one side of the marketplace. So they've just offered just one side of the marketplace, which is buy side. It's an imbalance. Sell side being inefficient, not being there, actually specifically stating. So right now I'm gonna show you an imbalance. I'm trying to find a buy side imbalance. You can see what I'm talking about. Let me try to find a clean one. Okay, I think we have one right here, just above here. This is actually weekly. This is a weekly time frame, which we also specified as a major, part of the major family. What I'm marking out here is an imbalance, guys. This is a buy side imbalance, sell side inefficiency. Only the buy side was offered and the sell side was not offered, so it created an inefficiency. Or to the sell side, which is also an imbalance because also only the buy side was offered, so it's an imbalance. What I'm actually marking out here specifically is a fair value gap, FVG, 3 candlestick movement. I'll draw an arrow to give you clarity what I'm talking about. Actually, this candle, 1, see, 2, and 3. This up close candle 1, that up close candle 2, and this down close candle 3. This is a 3 candlestick movement. This is what we call a fair value gap, generally known as a fair value gap, an imbalance. 1, as you can see, up close candle, another up close candle, 2, 3. This is an imbalance. What I marked out, this gap in between, this is what we call a fair value gap. This is what we call a fair value gap. 3 candlestick movement, as you can see. 1, right? Above it, here, at the end, on top of the tiny wick, if there's a tiny wick. Above his body, you mark it out. It's also this candle, the one in the middle, it causes a displacement. 2, 3, and the law of this candle. These 3 candles cause an imbalance. It's buy side imbalance, sell side inefficiency. What? Only buy side was being offered here. So the sell side was inefficient. Inspiring price to do what? Offer the sell side here. You can see even how price respects this level. Once it drops down below it, it tries to pierce back through it using an up close candle, but it fails and respects it and rallies down. Then imbalance, this is called the fair value gap. 3 candlestick movement. 1 this candle, 2 this one, 3 this one. Above this candle you mark it out, and the third candle, the last one, you mark the bottom of it. This is a what? Specifically a buy side imbalance, sell side inefficiency. It's a buy side fair value gap. Let me pull out the sell side fair value gap so that we balance the scales real quick before we continue. Before I show you the importance of the fair value gaps. The importance of the fair value gaps, as you can see, guys. This one is a sell side fair value gap. It's a sell side imbalance, buy side inefficiency. Because why? As you can see, 1 this candle, 2 this one, right, and 3 this candle. These 3 candles, just like these 3 candles right here, 1 this one, 2 this one, 3 with this down close candle, they caused an imbalance, which is a buy side imbalance, sell side inefficiency, because the sell side before this candles offered inside this gap, the sell side was inefficient, causing price to go down. Why? Because it was trying to offer the sell side, it was inefficient. Only the buy side was being offered here. Also here, let me mark it out before I explain the sell side one. Let me mark this other fair value gap here. This fair value gap, 1 above this candle right here, you can see. Use the mirror. Just look at the mirror here. You can see above it, this candle, you mark a line out. Then there's this candle. Then there's this last one below it, you mark it out. These 3 candles also create an imbalance, a buy side imbalance, sell side inefficiency, because the sell side is inefficient here. It does not offer its pressures during this 3 candlestick movement here. This is a fair value gap. Let me mark it out so that you all niggas have clarity. Actually, excuse my French. Too much hip hop, right? Too much hip hop culture. In the language, you're trying to be professional. I'm marking out another imbalance here, the buy side one. Buy side imbalance, sell side inefficiency, fair value gap, 3 candlestick movement. As you can see, this candle, this is an up close candle. 1 above it, you can see, mark the line out. 2, 3 below it, mark the line out. What is happening between here? This gap is a fair value gap. It's a displacement, a buy side imbalance. Only buy side was offered, sell side inefficiency. The sell side was inefficient. It became efficient when this candle started trading inside. This candle started trading inside the gap. And you can see, as you can see how the gap influences price. As you can see, support price here to go down. You can see the importance of the fair value gaps. It is supporting price to go up. Supporting price to go up. As you can see, Its price tried to it offered the sell side here. Look at the bodies. I told you the importance of the bodies. That's where the liquidity is. The bodies of this sell side candles, how they're respecting it. Even when it pays through here, look at how the bodies are just respecting the level. And it failed even to go further down here. It felt like it had purpose to fulfill up there. It used this gap as balance, as support to go up and shift market structure, creating a new high. Shift market structure here, clearing out this high, creating a new high here. Using support from this fair value gap. What is a fair value gap? A 3 candlestick movement. One. This one is a buy side one specifically. 2 with this candle. This candle is one which is causes the movement. The one in between is very important. 3. When you mark out the fair value gap, mark out the above. When is the buy side one? Above this first candle. Let the mid one play out, and below the last one. That's why you mark out the inefficiency, the buy side inefficiency, the buy side imbalance, sell side inefficiency, fair value gap of the buy side specifically. That's how you mark it out. Above of the first candle, let the single candle play out. Below the last candle, this is a buy side fair value gap. 3 candlestick movement. The importance of it, you can see it. Here again, you can see one. You can see, here you can see one. See, it's also a fair value gap. Look at how it's supporting price here. It's supporting this candle to go up here. 2 with this candle, 3 with this one. Last fair value gap doesn't mean that when it's a buy side fair value gap specifically, we can use a sell side candle to make it out. Even sell side candles, they create a fair value gap. As you can see, this is a fair value gap. 3 candles. 1, 2, the bottom of this candle, 3. As you can see, our price respects it when it gets to here. Rejecting price causing it what? To run it down. There's another fair value gap here. A sell side one. At the sell side fair value gap, the way you mark it out, you start with the above candle. 1, right? 2 with this down close candle. Then 3 with this candle. Also this down close candle. You can see also how price respects this level. Look at how it traded inside of it, respected. Continue with this, run it down, targeting sell side liquidity. Respecting this gap, this 3 candlestick gap. This is how you predict, how you mark it out. It's 1 with this candle, you see. Below it, below the first candle, mark below it. 2, let this one play out. Above the last one, vice versa. With the buy side fair value gap, you do what? The first candle you mark above it because price on an upwards momentum. 1, let the second one play out. 2, mark out the last one. 3, right? Same here. 1, let the second candle play out. 2, mark out the last one. 3. Differs from the sell side one. Look, you mark below the first candle. 1, let the second candle play out. 2, look at it there. 1, above it. 3, it's just vice versa. It's an imbalance. Sell side imbalance, buy side inefficiency, because only the sell side was offered when these 3 candlesticks were playing out. That's why we're going back inside of it to offer the buy side. Look at this candle, this up close candle. Why are we going back instead of the fail to offer the buy side? It's an imbalance, inefficiency. The buy side is inefficient, so I'm offering it with this candle here, up close candle. Then price continues to rally down. But before it rally down, what? You make sure that it offers the buy side. Because the buy side is what? Is inefficient. Why is inefficient? It's an imbalance. Why is it an imbalance? We'll offer the sell side with these candles. Because even this previous up close candles, you can see after it is what? Down close candle causing displacement. That's why I call it a displacement, because of the second candle that will let it play out. It causes a displacement, as you can see. The displacement. Fair value gap, 3 candlestick movement. You can see how it inspires price, guys. Let's go to the daily. Go back to the same level of these fair value gaps. This is the same level of this fair value gaps which I'm marking out on the weekly time frame. Same level, you can see, same level. See what I was talking about? Look at how price is respecting this same level. Write it down. Look at how it's respecting this. Write it down. You see the importance of the fair value gaps? They're like a magnet. They're just like liquidity. They're very important. They're like a magnet. They draw price to their levels. Excuse me, guys. I caught a little cold. You see the importance of the fair value gaps, the three candlestick movements. You see the importance of them. These are the fair value gaps which I was marking out on a major time frame, which is weekly. The importance of them. Look at our price. Look, the importance of the fair value gaps. The importance of these placements. Look at them. Look, the importance of the fair value gaps. You see the importance of the fair value gaps. Actually, when you drop down with other time frames, you can try to find the fair value gaps yourself. I'll give you an assignment. Try to find the fair value gaps yourself when you drop down with other time frames, because the level of the fair value gaps which are marked on the weekly time frame, which is also a major time frame. You can see also here there's a fair value gap here. Above this candle 1, causing a displacement 2, the last one 3. This is a fair value gap. Even when I mark out this level, it's expected here, pushing price to rally up to clear out the buy side liquidity above here. The importance of the fair value gaps. The support price and reject price, just like the order blocks, they relate. I told you when an algorithmic price action student, a lot of these things relate. They're going hand to hand. This is another fair value gap. As you can see, our price reacts to it, respecting the level, going down, creating another one here, respecting the level, just offering the buy side here. This is just one candle that which I was marking out there on weekly. Went down, push price down. After marking this out, it'll be end of a session, guys.